Okay, well, we'll get things started, and as people come in, grabbing their lunches and stuff, Kim, my colleague, can let them in. But thank you for taking the time to join us today. Good afternoon, bonjour, and my name is Ian Lane. I'm the executive director of the Northern Ontario Angels, and as I mentioned, based here in Sudbury. And I think we're joined by people from all across the region and throughout the province. So really excited to partner with Meridian Credit Union, where they're going to be showcasing their first to market business accelerator loan program. I'm really excited to learn more about this program, and I think we can all appreciate where we're sitting that it's difficult in this environment to raise funds and to grow your business. So kudos to Meridian and their partner BDC to be first to market with this really important program. Before we begin, I want to acknowledge that we are meeting virtually on Aboriginal land that has been inhabited by Indigenous people from the beginning. We acknowledge all the treaties and traditional territories on which all of you in attendance gather today. So a little bit about Northern Ontario Angels. We've been around since 2005. We're the only accredited angel organization in Northern Ontario. We're proud to be affiliated with the Angel Investors Ontario and the National Angel Capital Organization. And we're a non-for-profit that's governed by a regional board of directors. We have 3 staff. I'm joined by my colleague Kimberly Wahama Duchesne and Taryn Basson today. And we also have 8 part-time consultants covering the region. So all the way to the Manitoba border, up the James Bay coast, down to Parry Sound and Muskoka, and places in between. So we're truly a pan-northern organization, and we're really meant to connect high-growth companies with Northern Ontario accredited angels, and accredited angels rather. And so our process, our angels and our founders go in through an intake process on our website, and then we work with the founders to help them become investor ready. Then we pair them in with investors through a bunch of different formats: private pitches, public pitches. Maybe they just meet over a cup of coffee, whatever it may be. But our investments look, typically around 25,000 up to over 100,000, depending on the comfort level, the risk in the industry. But our team of consultants, like I mentioned, across the region, really help our founders get them investor ready, and then they pair nicely with accredited investors. So our success to date really can be attributed to meaningful partnerships. And with that, I'd like to introduce you to Caleb O'Connor, Director of Commercial Services with Meridian Credit Union. So Caleb and his team have been fantastic champions to the Northern Ontario Angels, a really great partner, and I want to thank them for the opportunity to co-host this information session. So Caleb is joined by his colleague Brian Mocha, who just until recently was Senior Manager of Business Banking Services. Not sure if that's changed, but I'm going to hand it over to Caleb to introduce Brian and walk you through this really important new program. So over to you, Caleb.
Yeah, thanks so much, Ian, and good morning to everyone. Again, my name's Caleb O'Connor. I'm the Director of Commercial Service at Meridian Credit Union for the Northern Ontario region. Certainly thankful for Ian and the team at the Northern Ontario Angels for partnering to help us to bring awareness to this exciting Accelerator loan guarantee program. This is the first of its kind to be launched in Canada and is in collaboration with the Business Development Bank of Canada. So I'm here with my colleague, Brian Mocha. About 5 minutes ago, Brian just received a promotion, so he is now Director, Business Banking Sales Support. And in today's presentation, we're very excited to introduce Meridian Credit Union, who we are, what we believe, and what we do. And we're also going to spend some time talking about the underserved groups in our community and how the Accelerator Loan Guarantee Program is designed to help entrepreneurs access capital. So who's Meridian? Well, Meridian's the largest credit union in Ontario. It's the second largest in Canada. And as a credit union, we are 100% owned by our members, by our clients. And this uniquely positioned us in the financial industry, and it helps to enable a longer-term strategy to serve our members and to serve our communities. Now, similar to charter banks, Meridian serves our members through retail, through commercial and wealth management products and service. Meridian also owns 2 different subsidiaries: Modus Bank, which is a Canadian digital charter bank, and Meridian OneCap, which is one of Canada's largest commercial equipment leasing companies. Now, at Meridian, we believe in helping our members achieve their best life, along with our vision to be recognized as an inclusive, transparent, and a people-focused financial partner. And this really drives everything that we do. Our corporate strategy, called Meridian for Good, was developed to bring that purpose and vision to life. And our Meridian for Good strategy, it helps us to guide all our efforts for our members, for our employees, and for the communities that we serve. We want to ensure that we're truly serving all members of society while also addressing and helping solve a broad spectrum of social and environmental issues, including affordable housing, climate change, and the transition to a carbon neutral economy. So as a community-owned organization, we reinvest in our communities. You see here on the slide, 4% of Meridian's pre-tax earnings are invested in charitable causes. And the employees at Meridian, we also live purposefully. And we see in 2022, we contributed over 3,500 hours and over $340,000 charitable donation dollars donated to 538 non-for-profit organizations. Now, living our purpose drives our goals as an organization. And our goal with this Accelerator Loan Guarantee Program is to ensure that all entrepreneurs have the support they need to grow. And support comes through the form of value-added partnership and advice, in addition to increased access to capital. So I'm now going to hand the floor over to my colleague, Brian. Brian, take it away.
Awesome. Thank you, Caleb, and thank you, everybody, for attending. Thanks for taking some time out of your busy days to hear from us today. So I want to quickly touch on what we could call equity deserving groups or underserved groups. Really the genesis of this program, it was designed with these groups in mind. And when I say these groups or underserved groups, I'm talking about the groups they're in the green box there. Your Indigenous owned, your LGBTQ, your visible minorities, your newcomers to Canada, and your women owned entrepreneurs. Really, this program, was designed to fill that need where, you've seen stats, you read articles, these particular groups it's just more challenging to get access to capital. So what we're here today, what we're here to talk about, and what we're hopefully here to show you is how we are going to increase access to affordable capital to these groups. And how we're going to do it, it's going to be by expanding our credit box, moving up the risk curve, and really taking on a little bit more risk than a traditional bank or financial institution would. Do want to point out, this program is for everybody, absolutely for everybody. However, there is a concerted focus on serving these underrepresented groups. So Meridian, we're privileged and honored, frankly, to have been chosen to be a financial institution, one of the pilot financial institutions for this program. With the BDC, we were one of 4 FIs that's been chosen to pilot it. And it's an 18-month pilot with a full launch to any FIs that are interested shortly thereafter. I'm also excited to say we're the only financial institution that's actually launched, which really speaks to just how nimble we are as an organization. We don't have a lot of red tape to cut through. We launched this program back in a few months ago, back in October, and we've been seeing some great results so far in just a few short months. So what does success look like for us? First and foremost, it's getting capital to the undernourished businesses to really help them grow and be the best that they can be. Second data point that really helps us determine what success is ensuring this program reaches those underrepresented businesses that we just highlighted on the last slide. Lastly, we want to make sure this program is easily scalable. We're an Ontario-based credit union. We're running this all the way from the southern tips of Ontario up to the north. We want to make sure that it's operationalized and resonating with everybody across the province. So what is it? Well, it's really an indirect guarantee loan program, which provides working capital to the underrepresented communities and the small and medium-sized entrepreneurs within those communities. High-level specifics of the program, it's working capital term loans as low as $25,000 up to a maximum of $500,000. The lending vehicle is a non-revolving term loan. This isn't for revolving debt. Security in all cases, it's a first position GSA. For those of you who don't know what a GSA is, it's a general security agreement, and a general security agreement, it's a charge over all the non-real estate assets of a borrower. So it's your accounts receivable, your inventory, your cash, etc. And augmenting the GSA security are personal guarantees from the shareholders. Any shareholder that's a 25% shareholder or greater, we would require personal guarantees from. Quick note that these loans can't be used to finance or to refinance existing debt. It's got to be new money for working capital. And all of these loans are secured by a BDC guarantee, which is a sliding scale, which starts at 100% and ranges down to 80% of the loan. Really, it's that guarantee from BDC that's really driving our ability to increase our risk appetite and widen our credit box. Lastly, I just want to point out here that this program does rely on Meridian's underwriting, Meridian's due diligence processes. Even though we've partnered with the BDC is really kind of in the background. It's Meridian's loans. Like I said, we underwrite them, which really makes for a slick operations, a lot of efficiency when we're processing these. So let's talk eligibility criteria. First and foremost, these are for, like I said, small and medium-sized enterprises. So the ceiling on what a medium-sized enterprise is $10 million in maximum annual revenues. So as long as your annual revenues are 10 million or below, it's great. You meet the eligibility criteria. This program is also designed to help out those businesses that have only been in business a little north of a year. One thing that newer businesses will tell you that they struggle with is a lot of the FIs. They want to see a trend, right? You go asking for financing. They want to see a couple of years of financial statements. They want to see that you can perform at the same level for a variety of years. There is a gap. There's a gap in the marketplace for somebody that's not a startup, has been in business for a year. This program is intended to help solve that gap. All we need to see is a minimum of 12 months of financial statements, and you meet the eligibility criteria. If you've got more than 12 months, fantastic. But if you only have 12, that's great too. There's a variety of sector exclusions. You can see them on the slide. I'm not going to run through them all there. Some usual suspects, if you're looking at that list. I will point out too that maybe wouldn't fall in the usual suspects list is nursing facilities and the construction, development, or sale of residential properties. But any other sectors that aren't listed there are fair game and are absolutely a part of this program. Last thing I want to say here, if you see any of our LinkedIn posts, if you see any of our external marketing, what's really neat about this program is it is a bit of a partnership with BDC, and you will see BDC's logo on our external marketing. You'll see like a little supported by and then BDC's logo. So definitely kind of a first of its kind type program where two FIs coming together to really try to solve one of the big challenges that exists in our communities, which is just difficulty accessing affordable capital. So let's talk program features. I mentioned this is a term loan. I mentioned the loan size, right? Starts at $25,000, goes up to $500,000. As far as interest rate is concerned, the highest interest rate we can charge is prime plus 5. That's why we've got up to prime plus 5 there. I do want to highlight that 2.5% of any facility that we finance does get remitted to BDC as an insurance premium for the guarantee that they provide. So perhaps in simpler terms, if we offered up a loan that was signed, and we offered pricing at prime plus 2.5%. The 2.5% would get remitted to BDC, and Meridian would actually get paid for a loan at prime. One thing to keep in mind when you look at that interest rate, really this kind of serves a portion of the market where if you go to a fintech, the capital is for a very short period of time, right? It's like maybe 6 to 18 months, and your interest rate is upwards of 18 to 20%. This is more patient capital. You see amortizations up to 6 years, and a far more palatable interest rate, prime plus 2.5, prime plus 3, etc. The BDC guarantee I mentioned earlier, it's there for the entire duration of the loan, up to a total of 6 years. For year 1, it's 100% guarantee. Years 2 and 3, it drops to 90%. And then the final 3 years, it's an 80% guarantee. There is a one-time 1% registration fee on the authorized loan balance for any loan that we do run through this program, and that one-time fee is also remitted to BDC in exchange for this guarantee. What I will say is, here at Meridian, we have a fantastic program. We call it the Switch program. And really, for small businesses, we're really willing to pay up to $2,500 in switching costs for somebody to move over to Meridian. And we can run that fee through those switching costs. So just a little nice add-on of dealing with Meridian. That one-time 1% registration fee, we'll absolutely consider paying that for an entrepreneur on their behalf. As far as use of proceeds go, like I mentioned, these are working capital loans. These loans need to be incremental to existing credit facilities. They cannot be used to replace existing debt. So let's run through a scenario 2 different ways. Let's say you're an existing business. Let's say you've got a $50,000 line of credit. Let's say it's maxed. You need some working capital. You need to inject some money. Let's say you took a $50,000 loan in this program. You dumped it into your line of credit. Your credit limit stayed as it was at $50,000. Totally acceptable way to use the money because your operating credit limit did not decrease as a result of the cash injection. You have not replaced existing exposure. Now, if we run through that scenario again, where let's say you've got a max line of credit, you get a $50,000 loan, you throw it into your line of credit, but your line of credit limit reduces to 0 as a result of the injection, that would not be an acceptable use of the money because you're paying out an existing credit facility. So we've broken these loans into 2 segments. The first segment is loans starting at $25,000 and going up to $100,000. Of course, the second segment is your loans north of $100,000 and up to $500,000. The criteria is a little different for each set. So let's start with segment 1 here. There is no DSR test required. So when I say no DSR test, DSR is an acronym. It's short for debt service ratio. And really what that is, for those that don't know, it's a way a financial institution takes a look at your net income and adds back your depreciation, your interest, and then it divides it by your debt obligations. And your typical segment 1, chartered bank, financial institution, whenever you ask for capital, they're looking for a minimum DSR ratio of 1.25 times. You'll notice for loans in this program up to $100,000, there is no DSR test required. We're not even looking at that. Instead, we have a matrix. We The loan quantum is determined based on our internal matrix. It's super simple. It's based on Beacon score and your BNI score. The BNI is your bankruptcy navigation index score. And it's that simple. It's quick. It's easy. You either meet the matrix or you don't. You don't have to run DSR tests. And finally, there is a Moody's default test that needs to be run, but the way that we've kind of operationalized this in-house, if you meet the criteria of the matrix, by default, you meet the criteria of the Moody's default test. Makes it super simple. Segment 2, let's say you were interested in a loan above 100,000. There is a DSR test. It's a DSR test of 1.1 times or greater, which is a little bit better than needing to show a DSR test of 1.25 times, as would a typical loan if you applied for a typical loan through a financial institution. And again, there would be a Moody's default test that would need to be run in the background as well. So I've mentioned a couple times, and I think Caleb mentioned it as well, really what we're trying to do is increase access to affordable capital. Well, what does that mean and what does that look like? That's what this slide is all about. If somebody that, you don't even want to look at the numbers on this slide, I'm going to say a couple of things. Number one, there's two grids here. The grid below, titled our existing matrix grid, is really how we would look at credit under $50,000 today. You can see a Beacon score on the left axis, BNI across the right. And you see a whole bunch of red boxes, right? Red's generally not associated as a good color when it comes to things like this. There's a bunch of zeros in those boxes. Under our existing matrix rules, we can't finance through our credit risk appetite. We can't finance entrepreneurs that fall within those red boxes. One of the first thing that jumps out at you when you look at this slide and the loan accelerator matrix grid, there's a lot less red boxes, right? So number one, when we talk about increasing access to affordable capital, you can see it first off in that there's just far less red boxes. You can see where here we've taken our credit box and we've stretched it out. The second thing that you probably noticed already is that the numbers are bigger, right? When you go transition from the grid below where it starts at 0 and caps out at 50,000, and then you go up to the grid up top, caps out at 100,000. So not only have we stretched the credit box, but we've even kind of stretched the loan quantum within this style of credit box. The other thing I want to point out, while we're on this slide is really all we're looking for from an entrepreneur is a personal financial statement and 12 plus months of financial statements. If we get those two pieces of information, we pull an Equifax report, we see if it meets this grid, and then we run it through our process. I mean, in less than 48 hours from the moment that an entrepreneur has submitted a personal financial statement and financial statements, personal net worth and financial statements, we've written up a loan, we've received loan approval, and we've got fulfillment documents in your hand to sign off. Very, very slick process. Want to touch on security again. So mentioned the GSA in all cases. Meridian's got to be the primary lender with a first position GSA guarantees. They're required from all personal and corporate shareholders that hold a 25% or greater interest in the enterprise. Talked about the BDC guarantee, starts at 100%, years 2 and 3, 90%, years 4 to 6, it's an 80% guarantee. There are two other documents that need to be signed in addition to the GSA and the personal guarantee doc, and it's a waiver form and it's an eligible borrower's declarations and obligations. Really what this form is, what these forms are, it's an attestation by the shareholders, by the organization, the entrepreneur, and that attestation is saying, hey, I don't operate my business in one of these excluded sectors. my annual revenues aren't in excess of $10 million. I haven't already benefited from loans in this program, that aggregate to above $500,000. I'm going to use the money for working capital. I'm not repaying existing debt, stuff like that. So applying for a loan is super easy, right? You approach Meridian, you've got a financing need. Through a conversation with Caleb or one of our other advisors, right? An opportunity is identified that fits with this program. I talked about earlier how we're really trying to reach the demographics that fall within those underserved businesses. One way that we're going to track that and find out are we doing that is through an online, there's a link to a BDC site. So when you've talked to us, we send you this link, and there's a voluntary self-disclosure form. And then this voluntary self-disclosure form, it asks you a couple of questions about your background, X, Y, and Z. You submit that. We as Meridian will never see the answers that anybody's given within that form, but we will get high level kind of macro data from BDC, which tells us, are we hitting these demographics? Are we solving the need, which we've seen in studies and which we've seen in statistics, that these underserved groups are having trouble accessing capital. So very important that we're tracking that and making sure that we are filling that we are meeting that need. And then finally, right, we process the loan, and BDC tracks that data, and it's as simple as that. And that's all there is to it. So happy to take any questions from the group on anything you've seen. Fire away.
Awesome. Thanks, Brian. Yeah, with the group we have here, if you want to raise your hand through the Teams function or put a question in the chat box, pose your questions to Brian and Caleb while you have them. Okay. Maybe I'll ask a question, get things started here, but can a single borrower apply multiple times for the loan?
Great question, Ian. Yes. So let's say you had a need for, I don't know, $75,000. You come in, you apply, as you continue to run your business, you realize you've got another working capital need 8 months later. Yeah, you can absolutely come in and apply again for another loan under the program. The only stipulation is that the aggregate of the loans cannot exceed $500,000.
Okay, thanks, Brian. A question did come in through the chat with Connor. Is there a certain amount of business revenue required to be able to apply for the loan?
So short answer is no. However, I'll say this: there's a bit of a smell test, right? So you come in, you say, I'm interested in $100,000. My beacon score is X. My BNI is Y. It fits in the grid. I qualify for $100,000. Great. One hurdle passed. You send us your personal financial statement, your net worth statement. Sorry, you send in your financial statements. If we look at your financial statements, and over the last 2 years, you've generated no more than $3,000 in annual revenue. Doesn't really pass the smell test that you need $100,000 if your business isn't generating more than $3,000 in revenue. Now, maybe there's a story that goes along with it, right? Like maybe last year's statements you did, $60,000 and you had a $10,000 loss at the result. But what this working capital is going to do is it's going to allow you to, expand your product line, and it's going to increase your revenues by X. Fantastic. That passes the smell test, right? Makes sense.
That's great, Brian. I appreciate that flexibility around each scenario is a bit different. Connor just said thank you. I'm curious, as this is newly deployed by Meridian. Can you give us anecdotal information around what kind of applicants you're seeing? Is it a broad range? Is it different types of sectors? Just trying to give a flavor for the audience around the diversity of the applications from a sector standpoint.
Yeah, for sure, Ian. Without sharing stuff that I can't share, I will say, in terms of diversity, we are seeing applicants from multiple sectors. I mean, I know off the top of my head, we've had some in the landscaping sector, we've had a few in the restaurant sector, we've had a few, I think, in a manufacturing sector. We've actually been pleasantly surprised on the data we've gotten back from BDC as well. I mean, this program's open to everybody, regardless of what you look like. If you've got a working capital need, we have a program for you. But like I said, one of the success factors is hitting those underrepresented groups. And I can tell you, based on the data we've gotten from BDC back to date, 70% of all the folks that have applied and gone to the website and filled out these voluntary self-identification forms are hitting those demographics. So the program so far, I mean, we're early, right? It's only been a couple of months, but so far so good. It is meeting those demographics, and we are seeing requests across multiple sectors, which is great too.
Yeah, fantastic. That's thank you for sharing that, and appreciate that. There's only so much you can share, but that's exactly, I think, where I was going with that. So we did have another question come in through the chat from, Shelley. So how long does it typically take for processing if you qualify to get the funding?
Super quick. You know what? I have to say, been involved in a lot of lending programs over the course of my career. We have got this thing down pat. From the moment that you submit the information we need, we will have something in your hands saying, here's our offer, in really 48 hours or less. It is that fast. It is our adjudication turnaround times, our industry lending. We have an internal, like a centralized team that writes up the applications. So we've got folks that are dedicated to this. It's quick, it's efficient. Yeah, we're really quite proud of it.
Awesome. Thanks, Brian. Just to add my own personal thing in here, just working with Caleb here in the north, and I know this is a little bit out of Caleb's scope, but I think the expedient fashion that our clients experience with Meridian has been really really quick too. So just from what we've seen and from what some of our clients have shared with us is that's true to form with this program as well. I did see another one come in with from Wayne. Hey Wayne. Is a company still eligible if they currently have BDC financing in place?
Yeah, short answer, Wayne, is yes. So BDC doesn't offer day-to-day accounts, right? They don't offer day-to-day banking. The one requirement of this program is you'd have to have a day-to-day account with us, conduct your day-to-day banking, and we'd need a first position GSA. Given BDC is a partner of ours, they would absolutely, like we do a pari passu GSA. We'd work together to ensure that we've got what we need to make sure that this program meets the spirits of this program, and that BDC still has what they need to ensure that they're covered off on their end. Most of the financing that you might do through a BDC is bigger assets, right? It's more hard real estate, whereas this is working capital. It's GSA based.
Yeah, thanks, Wayne. I think this is a similar question to what I asked earlier about if a borrower can apply multiple times, but what if hypothetically I own multiple businesses? Can each business qualify up to that 500,000 in debt?
So if you're a business owner, great question, Ian, and you own multiple businesses and you're a common shareholder of those businesses, It is a maximum of $500,000 aggregated across your businesses. So
Okay.
each one couldn't get up to 500,000 if you own multiple, if you were the common shareholder.
Yeah, that's helpful. Another question here. We'll just keep rolling. From Manny, could we get some clarity between a GSA versus a PSA?
Sure. Help me out, Manny. Give me the PSA. What's your acronym for that? I'm thinking personal statement, which probably not what you're going for.
So a general security arrangement versus a personal one. So like personal credit versus business credits, like in terms of security. Just wanted to get some clarity on that.
Yeah, so all of these loans are for businesses, but we take a look at the Equifax reports of the personal guarantor, and that's how we run our grids. What we do need is a general security agreement on the business with this program, not one on the personal side, not your PSA. So two separate and distinct items. GSA absolutely required, PSA not required for this program. Hopefully that helps.
Yeah, I got it. Perfect. Thank you. Thanks, Manny. I saw Stuart Morley. A woman client has a capital-intensive business that has been in business for a few years. She's bootstrapped with leases and has a small working loan with and credit card with one of the big 6 banks. Is this in this example, if she qualified, would she have to move all of their banking to Meridian?
We would need to be the day-to-day banker. That is correct. And really, to get a first position GSA loan, you kind of have to be the day-to-day banker. In a case where, BDC, the other financier, I mean, they don't offer day-to-day accounts. It's a much easier, much simpler arrangement. But yes, the intent is that your day-to-day banking is with Meridian. And that would help us get the first position GSA. It's an absolute requirement of the program.
Thanks, Brian. Thanks, Stuart. That's a great question. Anyone else have any final questions that they want to ask? Caleb, do you want to maybe add a bookend to what Brian presented? Give a northern perspective here.
Yeah, thanks again, everyone, for your attention here. We're really excited about this program. It sticks true to what our core values as an organization are, and look forward to seeing the continued success. If you do have additional questions, please be in touch with Ian. Ian's welcome to share my contact information. I can run points on this. And looking forward to getting back. And as Ian attested, we will get back quickly.
Yeah, thanks, Caleb. And as I mentioned earlier, really appreciate this opportunity to showcase this important new program. As we support through the Northern Ontario Angels entrepreneurs, founders that are looking to scale, we can all attest it's really difficult to raise money right now. And as you scale and it's a race to market, we need to use and leverage all the different types of programs available. So wonderful opportunity to showcase this new offering, and really appreciate Brian's time. Congratulations on the promotion, Brian, again. And Caleb, always thank you so much for being available and a great partner to us. So one final thing I would share is just if you're interested in learning more about Northern Ontario Angels, you can go to our website, northernontarioangels.ca, sign up to our newsletter. If you're an entrepreneur, there's an intake form there. If you're an investor that is interested in learning more, there's also an attestation form there as well. So again, thank you to Meridian Credit Union for being our great hosts. Feel free to reach out to us at info@northernontarioangels.ca. Thank you, merci, miigwech.